Alright. Good lord. Looks like I messed up this one in the beginning quite a bit, so I think we are finally live. Sorry it took an extra few minutes. So, hope everybody had an awesome week. Hope all your portfolios are super healthy. So, I'm going to jump right into questions that have been asked, particularly from Mr. Chow's predictions again. This tool that I brought up last time is super helpful. You asked me, let me grab the actual question. So I will post this into chat. And basically, it's the question is how is this play going to end up? And whenever you have a question like, what happens after expiration during the time, you can always use this options profit calculator. This is super handy. Even if you enter a trade right before you execute it, you can see exactly what should happen. So he's asking about a call spread. And the one he's asking about would statistically be very safe because it was Realty, it's just O, right? Is that Realty Income? Let me see. Yeah, ticker O. And this would be a debit, and because the price is so high, you're going to be relatively safe. I mean, it's probably not going to tank that far down. So, but also, you're going to pay a lot for this. You're going to pay quite a bit. I don't know that they're, let's see. So the max profit will be the two strikes minus each other. That is correct. So 35, he asked about it, 35 call and a 32.50 call. The difference is going to be 250, but we're probably going to pay a lot for this. So let's check this out. So we're going to buy a 32.50, and it depends how far out this is too. So we'll buy, let's see, they're probably, yeah, we'll probably have to do a monthly. They're not even this low. Oh, there we go. All right, so we'll buy a 32.50, right? And we're going to sell the 35. Let's just make sure that's what we had. Buys a call at strike price of 32.50, sells the call with of 35 from RO, and the max profit is not going to be 17.50 because the maximum, how you calculate the maximum profit is going to be $35 minus the 32.50, so that's a $250 spread. But then from that, that's your maximum profit, but you also are paying to get this credit spread. So you'll have a maximum profit. This actually shows a negative cost because it's so far down out of the money. And we'll see what I want to see, profit in dollar. Yeah, so you can't even pay, like according to this, you can't even pay less than what the maximum gain is going to be here. So if you can get a better fill on it, you can do the same one. Let's say, we'll just manually enter it. So if you're able to sell this for a little bit more, This is a terrible example. This is not something that you would do normally, but we'll get let's try a little bit wider. Maybe a 40. Yeah, it's still wanting. And maybe these are out of the whack. Yeah. So because this is so far in the money, you're just not going to be able to be profitable here. You wouldn't likely lose. The only way you lose is if it goes down, but basically at the end of the day, even if it tanked down $20, you're still just down your initial cost. So the only way really to do this, you would have to be closer to the money if you're wanting to buy a credit spread or buy a debit spread somewhere super close to the money. So let's buy a 57 and sell a 52. I think these guys are out of whack. Oh, no, we have the wrong one. Buy the lower one. There we go. So we do need to be a little bit closer to the money. So like for this example, you're still way down in the money. But here you can see kind of what happens, right? You can see initially it's going to cost you almost all of the potential profit. So for this example, we have between $47.50, $57.50. The difference there is $10, or 1,000 is what this would, the maximum that this spread can gain. But then you need to subtract from it what your actual cost. So this would be the cost to buy it, $845. So your maximum gain on this is going to be $155, which is the $1,000 minus the $845. And then you can always look at this calendar, and this is expiring way out. So as long as you're not going below that $57, you're profitable. But on the upside, you're not going to make any more money. The only thing that you will gain is if this happens to go up in a short period of time. So let's say long term, you don't want to be very risky. But if it happens to go quite a bit up, then you have some gains there. I know, like, for most of your questions, you seem like you're looking kind of for the cheat code for these options. And one thing is, the market is super fair. You're not going to be able to risk $1 and gain $99 without it basically being a 99% chance that you're going to lose. So there are those when you're asking, how can I turn $100 into 10,000? Well, when you go to look at, let's look at this, just go for a naked call, and we'll look at the same ticker, and this isn't a good, we want to buy it. So let's say you bought a call, they don't even have them super far up. So let's say we go to next year, you buy something super far out of the money. Let's say you think this thing is going to double. So you're going to buy a call for 5 cents, which is basically $5, right? And for your $100, you can buy 20 of those. And so now we can see what this gives us, right? So this is how you would turn potentially $100 into thousands of dollars. So if the stock happens to go skyrocketing up, yeah, you can make 30 grand. This graph only goes to 117. So this is where you can play like a low volatility also, and that's the reason it goes. You can gain so much. So from a stock that doesn't tend to move much, the options way far out of the money are going to be a lot more expensive, or a lot more. There's going to be a lot more payback for that because nobody expects it to go that high. So somebody on the other side will happily say, sure, I will sell you the right to buy my shares at 117 next month, no problem, and they'll collect that premium and they'll just keep their shares and you'll lose your money. But if they happen to be wrong and this stock goes up to $100, well, they're selling their stock at a lower price than what it goes up to, but you can capture this kind of money. So this is the only real way to make it. The strategy that I use 98% of the time is playing the opposite end of things. So so just to look at this graph real quick, you can see your play basically, like if it stays the same, you lose money. If it doesn't go up quick enough, you lose money. So if this play didn't go up to $90, you're still, at the end of the day, you still lost all your initial capital, although $100 isn't very much to risk. And if it goes down, you lose. So I play the opposite side of that. So for me, I am selling credit spreads, and this is why. And this is exactly why. So we will sell, let's say, something that's not too far out of the money on the put side. So we will sell a, what are we at? The price is at $60, and I'd probably actually look at the price history real quick. Let's look at it. So after the, wow. Yeah, this is year-to-date chart. So you can see right here, it's kind of in this range, right? So this 57, 64. So it's really stayed in that range, except for, of course, our craziness that we had. Even the 3-year. It looks like it's, just glancing at this, I know the company, but I haven't paid too much attention to the price history. You can see that it's pretty much steadily going up. And then since then, it's kind of stayed in this range. So the chances of it going below 57, again, are not very high. And we will, let's see, so we'll go back here. I'm going to check one thing here. Okay. All right. So that's why we'll sell the 57.50. And then we will buy the one below the 57.50. How about the 55? No, we'll go 52 because we usually do at least $5. Want to do $5. So this is going to cost us. Oh, on January 15th. No, we want to go farther out than that. So let's go March 19th, and we will sell the 57 put and 52.50. Okay. Make sure we have this right, and buy. Nope, we want this on. You gotta pay attention to make sure these dates are correct. Okay, so this is an example of something that I would do, and this is kind of playing the opposite side of it to what I think is much more safe. So we're gonna sell at 57.50, buy the 52.50. The collateral that they're gonna hold is the difference between the two, which is $5. They're gonna hold $500, but we're gonna receive $125 credit. And now when we look at this, we can see what this does for us. So initially, as we hold it, stock stays the same. We might be up or down a few dollars, but as we go out, you can see stock goes up. We get $125. We get to keep that premium. Stock goes down. As long as it doesn't go down too much, but this is, keep in mind, this is on the chart, that's what I saw. It doesn't go down very much, and this is not a very high volatility stock, so it can go down. We keep our money and make money, or if it stays the same, we make money. Either way, any of those things, we're still we're still collecting our $125, and inevitably we should keep that. And then here in the kind of the midsection, this is what's been happening with a lot of the Tesla plays I've been making. So if you notice, if it happens to go up, so if this stock goes to 66, let's say in a month, let's see what happens here, right? So 66, that means our profit is $104 on this play already. And I typically do not want to wait another 2 months to collect an extra $20. So at that point, if I saw it's a stock that's continually going up, I'm most likely going to close this or roll it out, move it out to collect more premium on my money. And I've been asked, why do I play Tesla? This is why. So let's look at, because when we look at this chart, it's going up. And even on these insane down days, I mean, this would be quite a difference, right? So this was August, and well, actually not even that long, right? So no, excuse me, September to December. So 3 months. So this is kind of like almost worst case. It drops down, and as long as we're managing our credit spreads, something if I had opened it up and been pretty greedy, right? And for me, greedy is about $100 out of the money. So I actually did this during this time. So let's say it's up here at 5:30, and I open one at 4:30. Which is down here. As soon as it drops, I do have the potential of losing all my initial capital. So as it went down, if I did not manage these, as soon as this dropped, I could just lose everything that I put in there as far as collateral. The other thing that you can do, and this is what I did, is I just moved it out. So time always gives us money. So from this date, I was able to roll them out. I think I rolled them out to February or March. So somewhere, let's see, where is February? Let's see if we can go on back. Why? Oh no, because February hasn't happened yet. And then you can see, like, at this point, we were way back in the money. So we're going to be able to preserve every dollar that we had in collateral. If you think this stock can just drop out of, then it's maybe not a good stock for you to pick to be able to play. But most things, and why I play that side, I mean, even with the SPY, even our 3-year chart, even when things drop, if you sold some stuff over here, you just had to roll it out. You could just move it out to these points here, and you're going to be able to still collect that money. You're not going to be able to do it right away, not like what you've been seeing me do every day or two and rolling out spreads and spreads and spreads, like and collecting 5,000, collecting 2,500 and all that jazz. I do that. I roll them out, so I'm getting closer to the money a little bit and taking advantage of that, and that's just all part of managing it. But you always do have an opportunity to shove it way out. So I mean, there's times where obviously it dips quite a bit, but as long as you keep rolling them out, and you can keep doing it, because time is always going to have some value, and as long as that spread has value, you can roll it out for more. Let's see, do we have... Let's see if we have any other questions. Not a whole lot this week compared to last week. Oh, just a question about my holdings and whether or not I hold stocks. Yes, I hold stocks, and I hold stock in this account. A decent amount. Let's see. Now we're holding $145,000 worth of Tesla itself. And then $3, $4, $5,000 worth of other stocks. I think Lemonade ended up being my next biggest holding. Yeah, 20,000, but I think I'm up 10,000 on that for my initial purchase. I purchased it. Where's the my average cost was only $63. So I think I purchased it really initially around 70 some, and then as it kept going down, I just added to it and added to it. Boy, that stock is nuts. This is actually one that there's very few that I want to hold just completely long term. This is one of them. Tesla, I just don't want to share. I just did a reoccurring purchase of Tesla, $50 a day, every trading day. Why not? Cedar Fair. I like this not because I love theme parks so much, but I wanted to be in the have some sort of in the real estate, some sort of money in the real estate, and that for me happens to be theme parks. This was super undervalued when it all crashed. Me personally, when I want to go do something like now, I just want to get out of the house, and a theme park almost seems to make sense. You're kind of outdoors. You don't have to be close to everybody. A lot of times it's sun shining out, so not bad. Tapestry, I bought that when it was super undervalued. They own Coach and Kate Spade. Pays a really good dividend when it pays. So I was super happy to get that. I think I got it at, I want to say $12, but watch me be so wrong. Oh no, yeah, 12 something. About 200 shares. So that's almost up 300%. And where does it show the, 4% dividend, but that's on the current price. So since I paid a third of that, that's going to be like a 12% dividend on my money. That's okay. What else are we holding? Coke and AT&T. Those are that's my savings account essentially. It's a high interest savings account. Normal savings account, you get whatever your 0.01%, which is ridiculously low. You know, these pay decent dividends, 4, 5, 6, 7% in there. Both of these two, I have the DRIP enabled, which is the dividend reinvesting. So as soon as I get paid a dividend, it goes right back into that purchasing shares for that stock. I also, on AT&T, since it doesn't move, I sell iron condors on there and then take that premium and put it right back into there. CWEN, Clean Energy Company. I don't believe in, I want to hold stuff that I actually believe in. Clean energy is definitely the way of the future. MGM, I could sell this. I could sell this pretty much anytime. I bought that because it was super cheap. And I also want to buy something because my girlfriend loves gambling. So I was like, we should buy casino stock. Hawaiian Airlines, I got a sign on those for $13, and now it's like $20. So holding that. Maybe long term, looking for some dividends. Hawaiian Airlines. Let's see. I got assigned on these too. These Dave & Buster's. Now they're $31, and I got assigned at $13. I sold a call on these, so in July they might be going away. I might be getting assigned to those. So someone may call away my stock on there. And what else do we have in this account? Fastly, bought those when the dip happened. And then I have some odds and ends that are just playing. I played some of the IPOs, and generally when they come out, I'll purchase. They usually come up, they skyrocket, come down for a while before they reach a point and then seem to take off. I saw it with AI, saw it with like DraftKings, DoorDash, quite a few. So some of those I'm still holding, which is, I think it's IPOF. That's a SPAC. This is bingo, might as well be just a meme stock at this point. So, and then holding some Bitcoin in the account, just a little bit over a tenth. When I see a drop, I buy a little bit more. But we're still up a bit on those. So, well, I don't think I had much else to go over. This might end up being kind of short. So, let me see. We have anything else? All right. Well, if there is nobody out there that has any questions today, I will go ahead and end this and continue on doing my Saturday list of things to do. So we'll take a look. All right, guys. Well, you guys all have a great day, and we will talk to you during the week, and we will see you next weekend. Maybe we'll get some more questions, and we can answer them there. All right. Have a great day, and make a lot of money.